Warranty Wire.
Customer trust.
AI.
Every day in the warranty world.
Hey guys, we're back as a trio. Welcome back, Mark.
Hey, it's good to be back. How are you guys doing?
Great.
We've cloned on without you, but it's good to have you back.
Excellent.
So everybody, welcome back to the Warranty Wire, the place for real talk about warranty in the age of automation, AI, and elevated expectations. So do you guys remember way back in our first episode? I'm testing you here. Exactly. We touched on something as our first podcast. You guys remember what it was?
No.
On the spot, no. Okay. So we teased about an episode about subscription warranty, and we had talked about one of our partners and how we had helped them in that space to be able to leverage subscriptions. So I thought today maybe we could dive into that a little bit more and talk about the shift, because we're experts in subscriptions. I myself probably have about 50, which half of which I don't even know who it's payable to or when it's paid. But I thought we could maybe dive into that a little bit more today, because I think the way we've all started to pay for things has completely shifted. I know for me it has, whether it comes to like streaming software. I saw the other day you can even get razor blades on subscription now. Like you can sign up for monthly razor blades to be sent to the house. But I think that warranty is kind of one of those last holdouts, just kind of clinging to the 5-year contract, paid up front, financed into the loan. So I thought today we could maybe dig into that a little bit more and look at what the subscription shift looks like, and kind of who's doing it and where they're succeeding.
I love it. If you had to guess how many subscriptions the average American has, what would you say?
Right to think.
8.
I'd probably go more, because I mean, just from like my TV, I probably have about 3 or 4 different subscriptions. So I'd probably go more like 12, 15.
The average today is 8.2.
Mark, you've done your homework.
No, I didn't.
Well, Matt, it's a good point, because even just TV, yeah, most people have like 3 or 4.
Yep, I do. So Mark, obviously you're a veteran of the warranty world and of this kind of space. Maybe you could kind of give a little bit of a dive back into kind of the old model, and maybe a little bit around kind of why, I suppose it's why it's cracking, yes, at the moment.
Yeah, I think, right off the top of my head, I think when you think about the auto space, for instance, right? The traditional warranty model is you go in, you get your car, you're going to finance it with the dealership. You're probably going to be obviously, talked about in the F&I office, 5-year, 10-year, maybe, VSC. It's built into the finance contract. And then ultimately you never talk about it again, right? Unless something breaks. So that model, if you think about that model, built for somebody that's going to keep their car for 7+ years, I think probably the average, you might keep your car now, I don't know, maybe 5 years. I don't know. I don't know what that number is today. But I think over the course of time, you're starting to see that's expensive, right? I think those are they're probably $5,000, that you're adding and you're paying interest on. And then if you don't, you want to put it, on your credit card or whatever, and not pay, a 5.5%, 6% interest, over 7 years, 60 months, whatever the case might be, that adds up. And so when you think about that model, and you got customers that are going a different route these days. They're not going to finance it, so they're not getting it. But they do want the protection. So a couple of years down the road, maybe that OEM warranty is out. then they're being offered subscription, through, their finance company, for instance, the credit union, maybe even through, other direct consumer type, um, companies out there that are going to send emails, send postcards, etc. And the model is going towards that easily digestible, subscription, right? Now, majority of them right now perhaps could be the, 2, 3 year term that's paid monthly, not the true subscription. Obviously, Axiom, we do support the true subscription. We see some really, really good numbers. The average lifespan of a subscription is about 17, 18 months. Over the course of that time, they're protected. We're there for the customer when they need us. So, what it brings to the clients on something like that, depending on their markup, you think about it, average markup, I would say, is probably what, 35, $40. That puts it in that sweet spot for an end consumer. So just do the quick math. They're making $300, $400 in markup. So it is something that is easily digestible for the customer. It's a good spot for the partner of ours, the client. So, and this is you think of, it's not only VSC, it's also electronics, right? You think about the Home Depot going in, buying a washer and dryer, right? You're going to be talked about by the protection plan. Maybe it's 3, 5 year plan. You know, um, Customers are, they're reluctant to buy that at that time. Then it's a 1 year manufacturer's warranty. So again, now all of a sudden you have, a home protection plan that kicks in, that covers that.
You raise a good point because I've kind of been through this recently. I've just like bought my first, I guess more kind of on the expensive side in terms of a car purchase, and at dealership, it felt like the last time I purchased a vehicle, it was like, oh, we've got these packages for you. You've got subscription vehicle service contracts. We've got paint coverage. We've got all these different products. This time it felt like more of a, well, I've got to present these to you because I've got to give you the full facts. But for me, the dealership didn't even expect to sell any of those to me because I'd already said up front, I'm going to look at options elsewhere because I'm already shelling out a huge amount on the car. I don't really then want to add this on top. And it's kind of like a thing for the dealership of, we know you're not going to purchase it, but we have to present you with the options. Whereas a few years ago, it was like, well, look at all these different packages that we've got for you, all these different products.
Yeah, I think that model has really changed from the consumer point of view. The time and place is everything, and a lot of customers feel more confident in buying from the comfort of their couch at home after they've had a day or month to digest their new car purchase, and then they can be presented in a more educational, transparent way from their phone to see these are all the benefits that warranty protection can provide to you on this new protection or this new asset that you have purchased, and allow them to go at their own pace from the comfort of their home to go through that transaction. So we've spent previous episodes, we've talked about e-commerce and how that makes a big switch. So time and place is a big one, but then also the convenience feature of it being a true month-to-month subscription. So customers don't feel so locked into a 60-month term that's wrapped into their loan, and it just feels a bit heavier. Now that most customers are in the market are having an average of 8 subscriptions, they understand how subscriptions work, they trust them, they find it easy. So being able to present to them protection product that can align with that purchase of their asset, whether that's vehicle, home, RV, power sport, and be able to have a true month-to-month subscription is a much more customer-friendly approach. It also has a cleaner cancellation, and the transparency just really well with the e-commerce approach. So customer is the one driving the process. They're able to feel educated. They can make that decision. And then if they do want to change that coverage or tweak it, everything's right there digitally at their fingertips. But then when you think about shifting the administrator and the dealer side, that is where the mountain is to climb because things have always been done a certain way. Your payment plan and your commission structure has been done a certain way. So when you look at subscription, that's still there available to you. And there's actually a lot of upside there because it's recurring compounding commission and there's no chargebacks, there's no waiting period before you can get paid on that. So since the coverage interval is fully earned for that subscription each month, or each renewal, then your commission is fully earned and you're able to receive that in a shorter amount of time. And there's no risk of a chargeback or having to pay that back if a cancellation does occur. So there's definitely an upside to the subscription model. We definitely see it on the customer side with the transparency and the modern approach that you see today, but then also on the dealer and administrator side, being able to have shorter intervals that are fully earned and receive that commission in a shorter period of time is definitely a win.
Yeah, I think even outside of the economics of it, you know, you kind of there's been that traditional model of I've got the customer in the dealership now that they're primed to purchase something, but I know I've got to present them with a three, four, $5,000 product, which they're not gonna stomach. Whereas now, all of these dealerships and all of these warranty administrators have the ability to target post sale and to target post sale of $40, $50 a month versus that high upfront. So it's the more and more I think about it, I go away. If I don't purchase at the dealership for $3,000, $4,000, I'm unlikely to come away and think, oh, maybe I do want to shell, to kind of shell that amount out now. Whereas if it's positioned to be in a more kind of palatable way, monthly, cancel any time, far, far more likely to take it out.
Yeah.
Yeah. I'd say real quick to that point, it's again, it's not an either or, it's an and because you are going to have those customers that, hey, listen, I just want to, I want to buy a plan. I want to be protected. I don't want to have to deal with it. I'm going to get it now. It's probably not going to be any cheaper, et cetera. Right. And they just go ahead and they do it. It's just where they feel peace of mind doing it today. And they do that. Right. That's great. But it's those other folks that, hey, listen, I just spent a lot of money on a new vehicle. Last thing I want to do is spend more. So, some, they don't get it. But then as time goes on, then the thought of, hey, maybe I should get protection. So if there's marketing attempts anywhere from 60 to, a year later, et cetera. And they're made aware of this other option that's more digestible and easier on their wallet, right? Then they're protected. So I think that it's an and position for the ones that are doing it well. They present it, they talk about it, at the time of in the F&I office, at the time of sale, but then also for basically at best the 85% who don't purchase it. Now there's an opportunity down the road to market them, educate them on the subscription. And that's where a lot of our clients are seeing huge success.
And out there in the market today, you do have the ability to target customers post sale and have that monthly payment, but it's typically wrapped into a finance agreement. So there's interest, there's a lot of terms, there's another third party coming in, and customers tend to lose trust in that process. And it's a harder pill to swallow for them, where a subscription that's just charging your credit card on file is a lot easier and more accustomed to what they're seeing with all the other subscriptions that are in their wallet today.
So I guess, one of the things that a lot of people will be thinking, kind of watching this podcast is why hasn't everybody made the leap? There doesn't seem to be any downside to running a subscription program to kind of move into that subscription side of things. But I think there's a few considerations that anybody watching this needs to bear in mind is, under the hood in terms of what your system has to be able to do. And we're lucky in the sense that, we custom built everything to kind of sit around the subscription model. But if you think about things like recurring billing when it's at scale, so you need to have a payment processor to be able to handle, expired cards, retries, ACH returns. So there are some considerations that you need to build into your software, into your commercial model. Things like handling mid-cycle changes or proration and refund logic. This is all things that need to be considered, but it's definitely not outside of the realms of any warranty administrator or any seller to be able to gradually move that program over to a subscription model. Yes, these are all considerations that you need to make into your software, but one thing that we found is there is no shortage of partners out there that can help you to do that when it comes to payment processing, anything like that, to be able to kind of take that burden and take that headache away from you. There's plenty of companies out there that can help you to kind of move to that model.
Yeah,
I
not
think
the payment processing is a pain point there. That is a scary thing to present to an administrator of, "What do you mean I have to know what PCI compliance is?" So you definitely would wanna lean on an expert in that realm who has that integration and partnership with a merchant processor. But then the other side of that coin is how you're managing that product itself. So is it truly going to renew? And in your administration system, are you able to see this customer is up on their payment? They're in good standing. They've just filed a claim. I know that they made a payment 2 days ago. Everything's settled. We're good to go. Or are they in a lapsed payment status? We need to make sure they get an updated card on file before we resume with any claim or any protection. So having the infrastructure and the software to be able to manage that for one contract and not have a workaround where you're generating a different contract number every renewal is huge for an administrator. So having software that's built on infrastructure that's flexible and able to manage that renewal is only going to make you more successful whenever you implement a subscription product.
Right. So I wonder, Mark, if you could maybe talk a little bit around what you're seeing in the market, in the industry around, we know that there are many companies that have moved to the subscription model, even outside of warranty, that are doing it well. They've moved from a legacy system, they've moved from a legacy product to subscription. But kind of what are you seeing in the industry today, and who's doing well?
Great question. We still see some reluctance, right, from the old school legacies, whether it's dealerships, whether it's credit unions, et cetera, that do the financing. For instance, it's really easy for them just to add that product right to the financing and just bake it in. But we are seeing a lot of credit unions now going ahead and remarketing, retargeting those loans, those customers with a subscription model because customers are they're getting the subscription. They're being targeted by everybody. You see those direct to consumer marketing materials is, when you buy a new home, when you buy, new vehicle, you're seeing it, right? They're capturing, they're paying for this data and they're targeting. So customers are being made aware that there are other options besides a very expensive term product. So they could very well be going to their financial institution, their credit union, et cetera, and asking for it, right? Or they might be going to their club and seeing that it's available through another membership that they have. So I think ultimately it's awareness. The ones that are very successful at this are driving awareness. Whether it's through text messaging, whether it's through, newsletters, whether it's through, they have a landing page on their website, and it's an organic search that customers are doing. Those are the ones that are highly successful at driving engagement because they're properly educating their customers what it does for them, how it works. No strings attached. There's no, refunds or anything like that. It's a true subscription model. And it works, right? And so they're already marketing their customers. They're just adding, hey, a little snippet in the marketing piece, letting them know that this is available. And it's all about awareness. That's it. They might not need it today. It could be like 6 months, a year down the road, or like, hey, you know what? I remember that piece. I'm going to reach back out, etc.
And I think, we've talked a lot about vehicles and warranty products around vehicles, but one of the areas that is, probably ahead of that is the kind of appliance and the electronic space. So, there's in the UK we have like a I don't know if you guys have in the US, but like a catalog where you go in and you purchase something, you go in and they have a huge warehouse and they stock it all.
It's called Amazon.
um, but now it's got to the point where no matter what you purchase, it's would you like breakdown protection with that? Would you like to cover that for the next 2 years? And it's a monthly subscription product with it, and it's pretty much with everything. I mean, what did I go to buy the other day? It was something like it's like a garden rake or something. And it's like, oh, do you like, protection against that in case you break it? It's like, well, no, I'll just buy another one. But my point is that you can, you can attach this protection and this warranty against pretty much anything that's out there. And I think what we've seen is that research shows that most consumers are willing to pay, $15 a month to be able to protect their phone, their laptop, or any other appliance, because if that goes wrong, then you're in trouble. So, what one thing I would say is as well, within our own data, because we've been running this subscription model now for many years, I think we have seen two things consistently, no matter who the seller is, no matter what the product is. The first one is that conversion rates went up significantly. And the main driver to that is the entry price. The entry price was lower. You're going to get higher attachment rates. You're going to get higher conversion rates. And the second piece, which is actually not what a lot of people fail to think about, is that lifetime value actually usually exceeds that traditional term product. Because if you sell a 60-month term product, once that 60 months is up, you may be able to then upsell that customer to another 12 months, 24 months, but you're then locking them into that term. Whereas with a subscription product, I mean, I've had my Netflix subscription now for, oh my God, probably 4 or 5 years. The same with my Spotify. I could not live without them. So with the subscription product, you then get to the point where you exceed that 60-month term, because all of a sudden it's become part and parcel of that consumer's monthly outgoings. I know that I have my $40 for my vehicle service contract, and that's built into my monthly outgoings. So actually, I'm going to continue to pay that out because I know that I'm covered then. I have peace of mind. So those are the two things that we have seen from our own data that subscription really drives. So I think a lot to digest there, but I think this has been a good one for us to dive into. And I think the thing with the subscription shift is it isn't a trend. It's catching up to pretty much every other category that consumers spend their money on today. And those, you've already mentioned it, Mark, those that kind of figure out the operational side when it comes to billing, clean cancellations, they're going to start to quietly kind of eat that share from the other ones who are still selling that traditional 60-month contract at the F&I desk. So my kind of takeaway with this is, if that's something that you're considering or you're wrestling with the decision on, then come and talk to us. It's one of the most common conversations that we're having right now.
Yep, absolutely. And again, it goes back to the whole thing. We're not looking to replace your current process. It's the add to it and be able to, to capture that revenue downstream for the ones who don't want the long term.
That's right. And without the right tools to manage the product on the software side, then there's really no place that you can go to bring this to market. So having the right partner to be able to deliver on the technology and the protection and the customer experience is definitely the first step in the right direction.
So, well, Mark, good to have you back. We will see you next time, hopefully. But for everybody else, thanks for tuning into another episode of The Warranty Wire. We'll see you soon.
Warranty Wire.
Customer trust.
AI.
Every day in the warranty world.